Tesla expected to report first quarter deliveries next week. Joining us now on why he's lowering his price target on the stock ahead of those numbers is Dan Ives, Wedbush Securities managing partner. I don't know, it just makes me smile a little bit, Dan. You could be lowering your numbers because the stock's at 175 and your target's 315. That'd be a good reason. We'll get all your other reasons, but that's a good start, I think. But it's a little bit odd. You're going down $15 to 300, and you're keeping an outperform rating. All this sounds sort of, I don't know, too little, too late.
Yeah, look, I mean, it's obviously a great point. Look, we're bullish for Tesla on the other side.
Well, you must be, because you still have a $300 price target.
This challenging
what's that return from 180 to 300 is? So you're still looking for like a 70% return.
Yeah,
right?
and look, we've been here before. In other words, like there's no doubt, and we call it out. I mean, this is a code red situation for Tesla. I mean, they are going through some dark days in China from a demand perspective. But Joe, I believe on the other side of this is a company, not just from an FSD perspective, but from volume that could start to get 2.5, 3 million vehicles per year as we go into the next few years. Our whole point here is you're in between two growth waves here. They clearly need to lay out a strategy for investors because this is going to be a rip the Band-Aid off delivery quarter next week, and there's no smoke and mirror about it. And I think right now from Musk, I kind of view it as a fork in the road period to handhold investors through this.
You are pretty blunt. First quarter deliveries for Tesla, and we'll find out next week, but you expect it to be a nightmare quarter because of China and China demand.
Yeah, I mean, China, we originally had that up 3-4%. It's going to be down 3 to 4%. And the issue here, is just that Game of Thrones price war that's happened in China with EVs. It's hurt Tesla, and I think right now the problem is, do they continue to cut prices, or do they ultimately hold serve and focus on where demand could be? And I think as much as we talk about FSD and why we're long-term bullish, and I do believe we're sitting here a year and a half from now at $1 trillion plus market cap.
Yeah, so when we were up at 300 or 299, wherever it was, I get at that point, were you still worried about supply and you didn't see the demand issues coming?
Yeah, I think where we were dead wrong is underestimating just how bad China demand was going to be.
China demand.
So for us, when I look back, that's really what's caught us, I think many, by surprise in terms of just how quickly demands come off, but also with no adult in the room, and with 2 disaster conference calls in a row, they haven't laid out guidance. They haven't given the strategy. You've had other noise in terms of the AI issues with Musk and obviously the Delaware comp issue, which is added to it. But I think that's the problem. They haven't laid out the strategy to where investors right now feel like they're blindfolded playing darts.
Do you have a price target in terms of 300, but do you think we're near a low here? Depending on what happens next week?
I mean, I think right now, a lot of the bad news is... I mean, we wouldn't be bullish if I didn't think that this stock is...
Why not put a buy on it then?
That is our highest rating.
Outperforms your highest rating?
Outperforming. It's on our top picks list. And I just view it as we've been through these white knuckle periods before over the years. This is another one now that we're hitting. And we're just calling it out, give out the strategy to what Musk needs to do in the conference call to get through some dark days ahead.
He doesn't really listen, though, to we've seen when you ask him about how do you feel about criticism, he doesn't, he's going to do what he thinks is right, and he's in a position to be able to do that.
No doubt, but I do think...
You said no adults in the room. You think he'll return to giving the street what it wants in these calls?
Well, I think ever since they lost their CFO since August, there have been basically Nightmare on Elm Street conference calls. This, I believe, is a wake-up call from a demand perspective. And look, if they don't lay this out in terms of the strategy and turn this around, then you could not just have some darker days, but I believe a lot of investors will start to lose faith in where the Tesla story is going, even though we're in between 2 growth waves. And that's our whole point, is that this is a nightmare in the near term. There's massive growth on the other side. You need to handhold investors through it. no different than we've seen Jensen, Cook, and the others over the years.
Talk technicals with Katie Stockton of Fairlead Strategies. She's the founder and managing partner and a CNBC contributor. Let's start. We'll try and touch on everything, but let's start with the S&P, which has been slowly, steadily, not even slowly, but I don't know if it's melting up yet, but it's been an impressive advance with no pullbacks, with no 2% pullbacks.
It's true, yeah.
What does that mean for how the duration of this? And is it broadening at this point?
Yeah, I think it is healthy as long as it has that broadening trend. The breadth has been incredibly strong. Yesterday was a great example. We had NVIDIA pulling back, and yet the ratio of up to down volume on the NYSE was 6-to-1. So we've really seen breadth kick in here. The cumulative advanced decline line for the NYSE is at a new all-time high. So, and that's really as of yesterday. It's not a decisive breakout. That would be another positive development. But just generally speaking, we do want to see the breadth data trending higher with the market, and I think that's what contributes to the sustainability.
What was your last resistance level when you were on? Because we're past that.
Oh,
right?
goodness. Yeah, I know. 48.19 was final resistance for the S&P 500.
now you don't know. Yeah.
Well, now it's NA. So,
right.
I think we were able to arrive at upside objectives. There was one from a breakout we had in Q4, and that was around 52.20, which, guess what, has been met. So this would be a natural place for consolidation, but we just don't have indications of that right now. The momentum still, as you know, very, very strong. And we can arrive at a more aggressive target from that breakout above 48.19 of about 61.20. And it's been our belief that that's more relevant for 2025.
Okay, 2025. So at this point, what is within the S&P or within, let's say, like even include the Russell? Is it small caps now outperforming, or do they still have more work to do to catch up?
They definitely have a lot of work to do to catch up, but we have seen some signs of strength there, both in absolute and relative terms.
Is that bullish?
2000. I think that's also bullish. It reflects the breadth expanding to small and mid. It shows risk appetite, and we're seeing that in other asset classes as well. So generally speaking, quite good, and it doesn't look nearly as extended just in its appearance as, of course, the S&P 500 would.
How long would you say gold was in a consolidation phase? How many years?
It was multi-years. Multi-year, yeah, something
Almost.
Close to that.
So where could we go?
Yeah, the breakout above that 2063 threshold was a big deal for us, and it allowed us to arrive at an objective intermediate term of about 2280. That's not too far off, but longer term of about 2500 for the price of gold. We think it'll be sort of a slow-moving ship that direction, but the momentum is there. And even right now, as of yesterday, we have what looks like, we call it a flag breakout on the charts. It's when you have a sharp up move, consolidation, and then a short-term breakout. So,
in a similar vein, I guess, if you believe that it's digital property, Bitcoin is also NA for an upside objective, is it not?
This is true, yeah. New all-time highs, that's what happens. And I mean, I believe in the uptrend at least. It has very good momentum. The pullback that we saw, it looks like nothing on the chart. It's pretty remarkable because it was 18% of downside, but it looks like a blip.
That is nothing for me.
It really is. And now, of course, within days, we've had a resumption higher. So I feel pretty good about the trend there as well. The breakout creates a long-term catalyst for Bitcoin, too. It's always going to be higher beta. The spread to the 50-day moving average, I looked at it this morning, it was something like 13-14% versus the S&P, which is about 4%. So those are initial support readings. But that's just the risk that you take by
commodities
investing.
in general. And we actually, a couple years ago, that one guy we have on, the oil guy, said we're in a super cycle. We in a super cycle? Commodities are rallying, aren't they?
And it feels also broad-based.
That's what I mean.
In the commodity complex, right? So I think we really need the energy complex within the broader commodity space to kick in a more meaningful way.
Even though it's at 80.
So there's resistance for crude oil around 83. Above that, we start talking about mid-90s, and that to me would be more meaningful because it still looks like a long-term trading range. I think the stocks are anticipating that kind of breakout. We've had really good action bottom up recently in the energy sector. They're still mostly range bound longer term, though, so it's not decisive yet. And then nat gas is nat gas, right? We have a proper downtrend there.
Cocoa. Becky likes the crappy little hollow bunnies instead of the
Easter.
instead of the solid.
Well, the kids don't want the solid.
I hope people
Too
get you a
much.
lot of those things that just crumble in your.
They just sit on your counter, half-eaten.
Yeah.
You never ate any of these things, right?
I know, it's true.
No. So let's not talk. Let's talk 10-year. The 10-year note. Then what's your latest read on what's happening there? Because now I don't know. I don't know if we're going to get cuts or not. I don't know whether.
Curry. That's what I was trying to figure out. Jeff Curry, right? I've been sitting here wrecking.
I mean, you could see both sides of it, right? So the end result on 10-year yields has really been neutral, a bit of a tug of war in the action yields. In the consolidation phase, we've been saying we could see maybe 4 or 5 out of the 10-year before it rolls over again. But the loss of long-term upside momentum is pretty meaningful behind yields, and that goes across the spectrum. So we feel that it's capped in a way. So it may be more of a neutral to lower environment that characterizes this year and part of next.
That's a big statement. I mean, that's if we knew 4.5 was it, that says a lot about it.
I'll make it bigger when I actually think mid-3s is realistic for the next year or so.
Well, then you're telling me where inflation's going to be then too, aren't you?
Yes.
It doesn't look like it's going to rear its head back to 40-year highs, causing 7 or 8% on the 10-year.
I would say no, not based on what
So
we're seeing
maybe
now. The
Waller
momentum
shouldn't be
just
so.
isn't there.
Maybe we ought to cut then. And I mean,
Look, to be
put the
fair,
metal to the
Waller
metal to the
said
pedal
we
to
need
the
to.
metal.
He said he needed to see at least a few more months' data before he would feel comfortable cutting. He didn't say no to this year for sure. Yeah. He said now that he feels uncomfortable with the last couple of months' data. He thinks if they're going to cut, they should see a couple of months.
The market definitely liked that.
Yeah,
for sure.
Show it coming back down, just to be safe.
Right. I don't know whether the 10-year controls inflationary expectations or vice versa. It's sort of the same.
It's remarkable how 10-year yields used to drive the market last year, and now it's NVIDIA.
Yeah.
Right. So the focus has changed.
President Xi met with American business leaders on the sideline of the China Development Forum. Joining us right now is Michelle Caruso-Cabrera, of course, a CNBC contributor and a friend of the show. It's good to see you.
Good morning. Good to see you.
So we have heard a lot about this. What was the takeaway of what happened? This was pretty important.
So I spoke with one of the CEOs who attended the meeting, and overall, I think the number one thing that was clear to this person was that China is not backing away from centralizing its economy, that it is not going to pursue pro-market reforms, as was suggested in her speech by the head of the IMF, which is a big negative. I think a lot went there to hear what the chairman was going to say about the future of the economy, and it's clear that they're trying to send a very positive message about the economy. She told these CEOs that the economy hasn't peaked, that a lot of people tell them how they should fix their economy, but they know how to fix their economy. But the bottom line is that the business environment is terrible and that they don't want to do the pro-market reforms that have been suggested. They don't believe in them. When you speak to Chinese officials and you ask about the private sector, the response you get back is, oh, we love small businesses. In other words, they conflate the private sector with small businesses. And then they go on to say...
Because it's smaller than the government.
Right. And then they go on to say, but, they're not big enough and stable enough to support an economy. That's why we have to back the big state-owned businesses. They like big business as long as they're owned by the state and controlled by the state. And that's not a recipe for growth.
I think some of the takeaway from this, too, though, is this was another kind of preaching to them.
Yes.
People have been getting this message where, OK, we're going to lecture you and tell you what you need to be doing on some of these things. I think the other message that comes out of it that may be even more concerning from a geopolitical standpoint, though, is the Chinese government not only saying, don't tell us how to run our economy, don't tell us how to run our borders. And in what they've said from some of the conversations I've heard, too, I saw a picture of some of the people who were there, have spoken with some of them, too. From what I've heard on this, just the idea that Taiwan they very much see as part of their borders and don't want anyone messing with.
It's a red line, absolutely. In the same sentence, when speaking about Taiwan, she said, we don't interfere with other people's borders. They shouldn't interfere with ours. Now, there are disputes about them interfering with other people's borders, but absolutely, we are on two different strategic trajectories, the United States and China.
The hawkish take on this, and it's not hard to find it in the Journal or anywhere today, is that getting in bed, these CEOs deferentially sitting there nodding and getting in bed with the CCP At the same time, we're worried about China exporting malware into our grids. For if we ever do have some type of confrontation, they won't even need to fire a shot at that point. When they decide to handle their own oversupply of everything over there by dumping crap like they've done in the past, they're going to dump EVs. Someone called it a bloodbath. Oh, my God, how could you do that? But when they start dumping EVs here like they're dumping other places, there's going to be tariffs. There's going to be it's going to be a hellish nightmare. And all these guys are over there just not even questioning what's happening because it's a Faustian bargain they need to make with the CCP, right?
Yeah, so two things I would say. Janet Yellen made a speech yesterday, the Treasury Secretary made a speech yesterday in Georgia highlighting exactly what you said. We saw what the Chinese did with steel. We saw what they did with aluminum. And now we see them doing it with EVs, with lithium-ion batteries, and with solar panels. That is not going to, won't get fooled again, right? I think you're absolutely right. Doesn't matter who's going to win in November. If the Chinese try to export their electric cars to the United States, there's going to be tariffs. They're going to be prohibited. That's never going to happen here. The CEOs who went, they have to go, right? Remember, a lot of people who invested in China did it starting 20 or 30 years ago when the bargain was different, when they were reforming, when they were reducing the role of government in business, when they were starting to distribute capital to the private sector in a much bigger fashion. They've done all of that has gone in reverse. And now, here they are. This is a very different bargain than when they got in originally. They have to go because they've invested so much there.
They were doing so well. They've got a huge class of people that are still not up to the standard of living for a lot of the rest of the world. So they were going to switch to a consumer-driven economy, and the only way to do that was to continue along with this style of capitalism they had. And so at this point, he's, as you said, no backtracking on going back to
centralized economy.
Deng Xiaoping. No, they're not going to go back to that.
No.
But the way that they're going to try to have their economy flourish is at the expense of the rest of the world.
Mm-hmm. Yeah, the line is 800 million people emerge from poverty over there. Just, another 500 million to go, to your point about if they were to continue on the path of reform. I would say that as we sit here and talk about what we think they should be doing, I think Xi's response would be, oh, yeah, everybody thinks we, what we should be doing with our economy. Let us handle our economy.
Don't tell us how to handle it. But it's going to be at our expense, though, and the rest of the world's expense. That's how they're going to.
So two things. When you look at asset allocations around the world, I was just speaking with Dan Ives, a previous guest, in the makeup room, which is where a lot of conversations happen here at CNBC, right? And you know why he's traveling to Asia so much? Because asset allocation to the United States has increased dramatically because people are not investing in China anymore because it is now uninvestable. So he has to spend a lot more time over there talking to institutional investors about the United States. So the United States has benefited. The other thing I would say is we've been talking about China finally getting rid of yield curve control and finally raising interest rates. I mean, go back 40 years, and if you had said, oh, my God, Japan's going to crash, and it's never going to recover, not for decades, I think we would have thought the global economy would have suffered far more dramatically than it did.
Right.
And it hasn't. Are we going to suffer because China isn't going to grow as much? Absolutely, because so many companies invested so much there. But look at the resilience of the United States. I mean, the market cap of NVIDIA is larger than a lot of, the major stock markets, the top, 20 listings in some of the major stock markets in Europe.
I want to head back down to the courthouse in Lower Manhattan. Our Kate Rooney now has a new statement, not only from the district attorney, I believe, or the prosecutors, Kate, but also from Sam Bankman-Fried's family, whom you tried to get on camera to respond, but at least they are through a statement.
That's right, Scott. We didn't get a non-camera statement, but we have a statement from the family. I do want to start with U.S. Attorney Damian Williams on the sentencing of Sam Bankman-Fried. He says here Samuel Bankman-Fried orchestrated one of the largest financial frauds in history, stealing over $8 billion of his customers' money. His deliberate and ongoing lies demonstrated a brazen disregard for customers' expectations and disrespect for the rule of law, all this so that he could secretly use his customers' money to expand his own power and influence. The scale of his crimes is measured not just by the amount of money that was stolen, but the extraordinary harm caused to victims here. It's a pretty long statement, but that's the crux of it. He says, again, it's an important message to others who might be tempted to engage in financial crimes, and that justice will be swift and the consequences will be severe. And then, Scott, as I mentioned, the statement from Bankman-Fried's family is brief. We are heartbroken and will continue to fight for our son. That's from a spokesperson for the family, Scott. But that is the latest here. And I'll send it back to you. We also, I think, are going to bring in
I understand you have Mackenzie Sagalos with you as well.
We do, we do. We'll zoom out here.
We can broaden the shot out so we can see Mackenzie, of course, who covers all of this for CNBC.com. And you can give us some color from inside the courtroom.
Yeah, so it's just up there. You had his parents in the front row, Sam Bankman-Fried, and both parents looking pretty stoic. It seemed as though they were braced for this outcome. 25 years, right in line with what a lot of former federal prosecutors were saying. The judge is a no-nonsense, veteran of the Southern District of New York. He said that Sam Bankman-Fried in his statement today showed no remorse. It was a continuation of blaming others for things that went wrong. Today, Sam pointed to the bankruptcy estate as being a bad actor and the reason that customers of the exchange were not made whole. He said that the money has always been there and continues to be there. And that goes to a larger narrative that came up during the sentencing where Judge Kaplan said, I can name at least 3 times. And he gave 3 examples of when Sam perjured himself on the stand during his trial in October. He said that today's statement was an extension of that. Again, still not accepting blame for his role in all this.
Mackenzie, can you give us an idea of maybe the emotional temperature in the courtroom as that sentence was read, both from Sam Bankman-Fried himself, but also his parents?
It's really his mom who showed the most emotion today. You saw her jaw quivering for the duration of the roughly 2-hour sentencing hearing. She would often, at times when the conversation was escalated, look out the window, look around the 26th floor. You can oversee the Manhattan skyline almost as an escape from the deliberations. Her husband seated right next to her, just completely folded over. Just parents who are really devastated by seeing what's happened to their son here. They've stood by him. They have been, at least when I covered this trial, they were in that courtroom every single day, standing by their son. Sam, no reaction. He really has just been stoic throughout the proceedings when he was found guilty of all charges after 3 hours of deliberation. Same reaction as today when he found out that he faces 25 years in prison.
And Mackenzie, I wonder too, we've been covering this from the get-go. Put in context kind of the scale and what this means for the cryptocurrency industry. It's hard to understate how significant Bankman-Fried was, whether it was Washington or just his influence on the overall industry. Put that in perspective from covering this for about a year now. What's your take on the long-term impact of this criminal fraud trial?
I mean, it's such a great question. You and I both have been covering this. We've been covering the implosion of Binance's status in the United States. Changpeng Zhao faces sentencing next month. I think it goes to this larger narrative that, the bad actors are being washed out. Meanwhile, major titans of Wall Street, asset managers like BlackRock are entering the space, bringing some of that TradFi legitimacy to, what was once seen as more of a rogue sector. And I actually think it's been a good thing seeing this washout. And just earlier this week, Do Kwon, another CEO being tried in this courtroom just behind us, also, being put, before a panel.
It's fascinating to see some of the washout in the fraud and crime, really, in this space. It was fascinating, too, to hear the defense say, this is not, or the prosecution, rather, say this is a simple case of fraud and crime, not necessarily anything to do with cryptocurrency. Really interesting today, the color from inside the courtroom, too. I wonder, based on the lead up to this seems to be in line with what folks were expecting. Is that fair to say?
Yeah, absolutely. So the government wanted 40 to 50 years. The defense was trying to make the case that he should see a max sentence of 6.5 years because the bankruptcy estate said that they were looking to make all customers whole. They were feeling pretty confident in that. And the judge said, hey, it doesn't matter if in the last 17 months the estate of FTX has been able to piece back together billions of dollars. At the end of the day, as you said, Kate, great point. It's just basic fraud. $8 billion of customer money was stolen and misappropriated.
I thought that dynamic was fascinating. The blame on Sullivan and Cromwell and the bankruptcy team. You heard really them, at least John Ray, who's the new CEO of FTX, say it was a metaphorical dumpster fire, what he took over. So some colorful language there. But Scott, I think we're going to send it back over to you.
Governor Christopher Waller suggesting that the Federal Reserve could cut fewer times this year and start later as a result of stronger than expected growth, also inflation data so far this year. Let's find out what all this means for the markets. Jim Paulsen is former chief investment strategist for both the Leuthold Group and Wells Capital Management, currently the author of the newsletter, Paulsen Perspectives. So I'm trying to figure things out, Jim. You did not retire. Did you retire and get pulled back in, or is it the newsletter, or we haven't seen you in a while? Did Luthold tell you? Did you sign some kind of non-compete or something? Why haven't you been on the show for, how long's it been? A couple of years?
Well, it's been over a year. Yeah, I tell you, Joe, I'm still retired. But I just this is just one of my hobbies. I just never really totally could get away from the markets and the economy.
Let's see how you could. And I'm glad you didn't.
So yeah. I'm right.
Let me, the last time, I'm trying to, my memory is actually still pretty good, but the last time you were on, you were much more bullish than the street. I remember that, and that's why I was disappointed when you weren't going to be on anymore. But I don't remember whether you were bullish for the right reasons. And in the past, there have been other instances where you were right, but for the wrong reasons, and other times when you were wrong but had all the right reasons. Do you remember what do you remember all those times? Commodities, all that stuff. Yeah, and you were never, you may have known nothing, but you were never in doubt. That's what we love. But a year and a half ago, when you were on, you were bullish on the markets. Why?
Well, the primary reason, Joe, was disinflation. Disinflation historically has been such a powerfully good force for stock market. I mean, it does a lot of great things. It takes the pressure off, cost pressures off companies. It raises the real purchasing power of households. It raises consumer business confidence. It tends to cause stocks and bonds both to go up as a wealth effect. That was the primary reason. I expected rate cuts this last year. I did. I think the Fed's been super tardy, both on the way up with inflation and on the way down. In fact, when I look back historically, Joe, at the Fed's performance, it's an absolute outlier in post-war history. They didn't raise rates the entire surge of inflation from 0 to 8.5%, and then they raised rates the entire time that inflation decelerated from 9 back to 3%. And no one's ever done that before. Usually the Fed is raising rates when inflation is accelerating and cutting rates when it's decelerating, and they've done neither of those. They were late to tighten, and now they've been late to ease.
So when you were talking that you thought disinflation was going to boost the market, that was after we had already seen the 40-year highs in inflation. So you thought it was going to come down more quickly than the Fed thought, and that basically has happened until recently, where it looks like it's sticky. You don't think right now it is a problem, and you think Waller's wrong to say don't cut right away?
Well, one thing that I find fascinating today, Joe, is let's just look for a minute where we're at. We got this, all this apprehension because we're not at 2% inflation. It's like terrorism that we can't get there, and how bad it'll be if we don't. But here's the reality. We're sitting in the last a little over a year, about a year, and the CPI inflation rate's been 3%. It's been very steady and stable, hovering around that level. Wage inflation for the last 6 months has been very stable, around 4%. The real wage rate has been rising steadily, now at a 1% clip. Real GDP growth is 3.1% in the last year. Employment growth just shy of 2%. Productivity is at 2.6. The unemployment rate has been less than 4% for almost 2 years, and the stock market's up 30% in the last year. In earlier times, when we didn't have this 2% fixation, we would call this environment nirvana. That would be nirvana. In fact, it has echoes of what Greenspan had in the 1990s during his era. That was kind of the data he had, and that's how he got the moniker Maestro. And today, we have so much criticism of everything that's going on and worry about how it's going to turn out. And yet, I think you ought to step back and look at this. This is a pretty good environment, and I think it's going to likely stay that way for a while. We're only a little over 1 year into this bull market, and much of the market hasn't even really joined the party yet. There's all this cash sitting in money market funds that could come back in. There's a lot of good things that could still happen.
It's interesting because, it's like 2%. Suddenly that became, like, if you don't get to 2%, I mean, I don't know what might happen. I mean, the sun might not come up if we don't get to, but there is a feeling that if you don't get it to that point, you haven't really wrung it out of the system, and it can come back and go to much higher than like 3. I don't see 3 doesn't sound that bad. It really doesn't. And historically, it's not that bad. But they think that would portend 4, 5, 6, back to those horrible numbers that we're all still dealing with because it's still in a lot of these prices. But we got to go, Jim. But it's been too long.
Look back to 1980. We have not had a serious inflation outside of the pandemic-induced inflation. Even though unemployment's got low, even though we've been growing strong, we have been unable to produce a serious inflation. And that's because we have such strong secular disinflationary forces that still exist today.
Still
and
here.
Without a pandemic, we couldn't have done that.